Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me, Surbhi Upadhyay. The RBI in wait-and-watch mode. Interest rates remain unchanged and the markets are consolidating. Hi, Surbhi. 24,200 on the Nifty. A little bit of red, but the mid-caps are in the green.
The interesting reaction is coming in on the bank Nifty. I think they're still trying to figure out whether this policy indeed was hawkish or not, because the RBI governor has he's not changed rates, there's no change in stance, but also no hint of more dovishness or some sort of easing that's coming forward. He's remained steadfast on inflation and saying that we cannot, keep our eye off the goal. Let's very quickly bring up the intraday chart on the bank Nifty. The one reason why maybe banks, are recovering from the lows, the earlier lows of the morning, could be, look at that bank Nifty chart. That's looking very impressive because the governor has acknowledged that this fight for deposits is an issue. And he has sort of acknowledged the fact that other alternative investment opportunities are taking deposits away from banks. And, that's pretty much the feedstock on which banks run. So the fact that the central government is also watching, taking cognizance, don't know if something new is coming. There is, of course, a lot of talk about more innovative products to retain those deposits. So let's see, but maybe that's something that the market is taking heart from, because otherwise it's been a bit of a non-event policy. Not much has changed in the bond yield. The bond yield, last I checked, the benchmark yield moved up exactly 1 basis points. So not much of a move otherwise. We have Ajay Srivastava joining in. So let's straight away get to him and get his perspective on what we've heard today. Ajay, good morning. Great to have you on. So what did you make of it? None of the rumblings, neither from Wall Street nor this whole yen carry trade. There was a brief mention, but I don't think the RBI governor allowed any of that to influence his decision, at least right now. Your thoughts?
I've always called our RBI governor the most Zen RBI governor in any bank in the world. He is Zen, absolutely. Yeah. Nothing phases him. The guy just gives you the comfort. He walks in, sits down, gives you the bad news. Now, here is it. He's given you great bad news that the inflation in the current quarter is going to be significantly higher than what they had anticipated. But he gave it in such a nice way, you never felt bad about it. But if you are a saver, if you are a common man, you're going to hurt because the inflation is now mounting. And I think that's been the Achilles heel of the RBI policy, has been inflation. The number two is, I think, great relief for the banks today. They were all coming in with the policy expectation that he is going to be stringent on personal loans. I think nothing happened on that. No increase in weightages, no increase in coverages, nothing at all on the personal loan. It's a great relief for the banks today because they were just, I can tell you, each of the bankers was apprehending some new measures coming to the personal loans. He's mentioned about top-up loans, etc. But there's no tangible way to restrict loans, and I think banks will be heaving a sigh of relief that yes, happened. NBFCs, now they won't heave a sigh of relief because what they've done is reporting moves from a month to a fortnight, which means their ability to hide a default now goes down. So you had a 1 month to hide a default. Now you do correct it in 15 days or report in 15 days. So I think it's a great positive for the bank. No restriction on personal lending. It's a pretty bit negative for the NBFCs because they will have to now report in every 15 fortnightly, which means time to cover a default in a personal loan or an unsecured loan gets half of what it was before. And maybe next time it's going to be 1 week and it'll become further short. So I think all in all, it's a relief for the banks. All in all, the greatest relief for the Indian economy and the market for all of us is the great pushback to say inflation means inflation. Inflation means not core inflation without food or oil. That's a sustenance. And I think we should take away that this is one fact that the RBI governor has been independent of the political narrative on inflation and is targeting it. He's failing. That's the worst part. With all good intention, he's failing and hurting the savers. But the fact is, today he made a categorical statement, inflation is inflation. And I think that's the greatest positive of today's policy, that one statement saying inflation includes oil, includes food.
Well, absolutely. He set the record straight. Which is the inflation you need to focus on? And that's the headline inflation. Unfortunately, over the next 4 months, the lowest inflation forecast is 4.3% in Q4 of FY25. That's the Jan to March quarter of next calendar year. So it doesn't go below that for the next 12 months. But Ajay, morning. What about the global turmoil that we've seen in the equity markets over the last a week or so now? Do you think it's a bit of an overreaction? What are you advising your clients?
See, the global markets, as far as Indian investors are concerned, haven't done well. Because if you look at the returns on Indian markets versus what's happened on NASDAQ, what's happened on the Dow Jones, we're not anywhere in comparison zone. So by and large, we were kind of underinvested in most American market. Having said that, people have to understand that American market works lots on leverage. There's so much free-flowing leverage sitting there, the futures and the borrowing, it's rampant there. Compared to look at India, whether it's the HNIs, the PMS, most individual mutual fund investors, they're not leveraged. India's leverage market is very, very small, and cash leverage market is still smaller. So, so contextually speaking, we are far more safer because we don't need to make a margin call every morning and pay off and sell the equity. In US, when the yen trade was unraveling and the yen started to appreciate after this thing, they had to sell. There's no choice. So I think one economic factor only affects much, but the US is one economy which sits on leverage, loves leverage. Other people's money is their mantra, and they pay the price for it. They make super gains because for 10 rupees of capital, they borrow 90, they invest 100. So even as 10% return, they double the money. But when they lose big. So their volatility to large extent, if you ask me, is a product of the leverage economy that sits on it and leverage trading, the hedge funds, compared to our setup, which is very, very cash denominated. People invest surpluses, people don't borrow too much against shares. And therefore, economically, even if same things happen, the impact in US will always be significantly more negative than India because simply he has to pay off the margin call.
But I guess regulators here are worried that we may be going the US or the West way, right? We've seen that from all regulators, from SEBI, RBI, even the economic survey talking about speculation and how it's really, broken the back of many Western markets. But anyway, that's a long debate. I'm not getting into that. The here and now, Ajay. So this is the market, and I think today's policy tells us that the RBI won't be in any hurry to cut rates. The global setup is what it is. What should investors be doing?
Pharma. There is a next colleague of yours is the biggest expert on pharma I have met across. And I think I've known her for almost a decade. She's a pharma expert. She can tell you that pharma is the best place to be for 2-3 reasons. One, of course, you need to buy medicines, right? At the end of the day, whether you like it or not. Number two is the great amount of now we're seeing a deregulation happening in MNC pharma companies being able to bring drugs to India. So MNC pharmas were the worst performers in pharma sector in the last 10 years. They've done a good job in the last 1 to 2 years. I think they'll do a phenomenal job. You saw the reduction in custom duty coming in. Today, they gave exemption that if you have a clinical trial in the EU drug, you can bring it into India without doing a clinical trial into India. So, suddenly the market for MNC pharma companies to bring the global products into India is now expanding and becoming regulatory friendly at this point of time. Our generic pharma companies are doing very well in formulation in India, so they are performing well. All are debt-free, all are surplus in cash, all have decided not to focus on large M&As, all focus on Indian formulation strategy. US, yes, is a pain point, but it's not stopped being a pain point. It's become flat or a little bit about it. So I think if you look at Indian economy at this point of time and our growth and our demographics, pharma represents the best sector to be, whether it is the end of the product for consumer, the product makers, the formulation makers, or the CDMOs, or the pipeline. That's the best sector to be in India. And as we eat more, as we drink more, you need more medicines, don't you?
Okay, Ajay, we'll leave the conversation here for now. Point well made. Pharma is the place to be if you want to look at India. But we need to get into a break. We'll come back with more on the markets.
Thanks to this bit of an uplift on some of the banking names, the Nifty's losses have been restricted to about 90 odd points. We are, not entirely off the lows, but I mean, far away from the lowest level that we've seen today. Just look at a couple of the banking names. The intraday chart's looking interesting on a HDFC Bank, on a State Bank of India, and that's the reason why the Nifty Bank also had a bit of a recovery. But of course, it's the durability of that recovery that's in question. So that's near the day's high on both of these stocks. The other one having a good session right now is Bharti Airtel. Good move on Bharti. Just about 0.7% higher, but it's a big stock that's on the move as well. So some of the stocks that are high flyers. And then the usual winners include some auto names, Tata Motors, M&M. These are stocks that have had a good morning so far. Well, those are the winners on the Nifty right now. Let's take a break. We'll come back with a lot more, several corporate conversations lined up. We'll have Ramneek Ceigall from Ceigall India joining in. The company is making its D Street debut.
Welcome back. Welcome back. Keep your eye on Fusion Microfinance. Yesterday was down 20% on the back of weak numbers, and today it's down 12%. Remember, on the back of very weak numbers, the company said that they've stopped disbursements in 104 branches and to customers with loans from more than 4 lenders. MK today has slashed the target price from 700 to 340. So Fusion Microfinance, absolutely no relief, 35% gone in a span of 2 days. Lemon Tree is another one under pressure. The company's occupancies have come down in Q1 to 66.6% on account of elections, the extreme heat. So Lemon Tree is under pressure too. And Balaji Mines, where the profits are down 33%, under pressure too. On the way up, BSE continues to hold on to gains. This is a stock which has given you a return of 70% over the last 5 years. So it's been a phenomenal wealth creator, and ITD cementation too continues to rise higher. 11% gain on that. Get into a break. We'll come back with more on the markets.
Welcome back. Ceigall India has made its debut on the street today, listing at a price of about 419 rupees on the NSE, a premium of about 4.5% to the issue price. Right now, the stock's holding up above 400, just around 403. We have Ramneek Ceigall, Managing Director of the company, joining in. Mr. Ceigall, good to have you on. I remember, our chat when the IPO was open. So now that you've listed, congratulations, first of all. Let's talk numbers. We discussed your order book position and how you're looking to grow the ham side earlier. Now give us some visibility on execution and revenues. What is a steady state revenue growth that you will target over this year, FY25, and also FY26?
First of all, thank you so much for having me over. And, it was such a great day, and we did our ringing the bell ceremony today, and it was great. Thanks to all my investors, my financial partners, my employees, who are actually my strength. So if you talk about order book value, we had about 9,400 crore. We have just got 2 more. We've been L1 in 2 more tenders now. One is we've added another state. We should get a LOA very soon. That's Bhubaneswar Metro for 899 crores. Another state is added. And another one is a small project which is in Kanpur, which we have to develop. That's a building work. That's a small project under 200 crores for building that 3 to 4 acre infrastructure, and that'll be for at least for 90 years. And the targeted IRR, what we have quoted in that project, is close to 20% equity IRR. So it's going to be a great journey. I always used to say, and I still say, Ceigall 2.0 is there now after the IPO, and sky is the limit for us. And we are a young company. The journey is yet to begin. You have always seen our growth rate over the years, and the care has given that in the industry report.
Mr. Ceigall, absolutely, yes. I'm sure you have a very promising order book. We've seen that. We've discussed that in the past as well. Let's talk revenue now. You moved from about 2,070 crores of revenue to almost 3,030 crores in FY24. When does this 3,030 become, say, 4,000 or above 4,000? Give us a top line number that you'll do this year and that you'll target next year.
So, as I said, you've seen our growth report before also. We are on the same track, and we'll be trying a level best to achieve what you said. You've seen a growth. We have grown by 47%. And this year also, achieving the target is never a difficulty for Ceigall, because, our execution is the main USP. We've been completing our projects before time. In last quarter, we have received one bonus also, because we completed our first HAM project 8 months ahead of schedule. And we got 15.7 crore as a bonus in that project. And that was in the first quarter itself. So going forward, revenue will never be a challenge for Ceigall. That has been proved and shown before also. And the numbers which you're saying is achievable. That's not a problem. Thank you.
Given the execution. So what is the target that you have in mind for FY25 revenues? A number.
So we are a conservative company. We always tell less numbers and we achieve more.
So
as
give us
a
the
rough
less
target,
number.
It'll be somewhere close to. Okay. So what we have done last year, it'll be more than 15% more than that. So going forward, I mean, these are conservative numbers. Thank you.
Sure. What is the July order book? We have the number as of June, 9,400 crore rupees. What's the updated number given the order wins that you've had? And also, what will be your debt post the repayment from the money that you've raised via from the IPO?
So debt will be negligible because you can say almost 62% of the debt is going to be paid with this money coming from the IPO. And it'll be one of the best debt equity ratio in the market in infra sector in the listing space. So the debt will be negligible, and we will be paying off about 414 crores. And the rest is the BG limit. BG, every infra company requires it for performing. We have to give a performance bank guarantees and bid securities. So I mean, company is cash rich. That's not a problem. Order book value, we had about 9,400 crore before. We have just got 2 more projects. I mean, we are L1. So the formal letter of award to be received by both the departments. One is the tender by Delhi Metro. It's in Bhubaneswar for 899 crores. And we were about 3.4% above the DMRC rate. So I think we are expecting that LOA very soon. And the difference of L1 and L2 was hardly 11 crores. So the new state is added. That's Odisha. And the second project is a little under 200 crores. That's development of a bus terminal in Kanpur. Again, LOA is weighted, but we are L1 in both the projects. Thank you.
But you mentioned that. So as of now, the order book is still 9,400.
10,500 crores.
10,500 is the updated order book position. Okay. With these 2.
No. So we don't update till the time we receive a LOA.
Right.
Otherwise, if you want to ask me, 899 crores, we at L1 in one tender and less than 200 crores in second tender. So if you total it will be more than 10,500 crores. Thank you.
Got it. So once you actually officially get these 2 in the bag as well, then your order book will be around 10,500 crores. Got that? Thank you very much. Good talking to you, and we look forward to more conversations ahead. Well, that is the new listing of the day.
Thank you for having me once more.
Thank you. Ceigall India, the new listing of the day. We'll take a quick break. On the other side, another corporate conversation. Aadhar Housing is the next company in focus. Came out with numbers. We will get chatting with the management in just a bit.
Welcome back. Let's invite the next corporate on our show, Aadhar Housing Finance. Stock is up 2% post the Q1 numbers. The NII, net interest income, and the profits have gone up on a year-on-year basis, though the asset quality has deteriorated marginally, sequentially. We have with us Rishi Anand, MD and CEO of the company, joining in. Rishi, morning. Thank you for joining in. This is Reema here. First, if I may just quiz you on your disbursements. Your disbursements are down on a quarter-on-quarter basis, and on a year-on-year basis, I think the growth is just about 4%. Have things slowed down, or are you consciously dispersing less?
Good morning, Reema, and good morning, Surbi. So yes, you're right. Our quarter-on-quarter disbursement numbers, you see. See the way home loan industry works is quarter 4 on a sequential quarter 4 versus quarter 1. Quarter 1 numbers will always be on an incremental disbursement will always be lower. That's how the industry seasonality works. But from a perspective of YOY quarter on quarter, you would see a 4% growth that has been published. I would want to put a note to it that this is post accounting of the RBI circular that came on 29th of April in terms of recognition of interest from check handover date. So if I were to do an apple-to-apple comparison, the growth would be upward of 25%. On a YOY basis, adjusted to the RBI circular, it stands at 4%. So to answer the question, there has been no degrowth, in plans. We continue with our indication of 22 to 24% growth on AUM for the financial year. 22 to 24% growth on AUM. Got that, sir? All right, so let's talk about how spreads are moving. I think you're close to 6%, if I'm not mistaken, this time around. Yeah, 6%. Yeah, yield is quite steady at around 14%. But looking at the market reality, cost of funds, etc.,
Do you expect this to remain at these levels, or could there be some pressure in the coming months?
So Surbi, we've been guiding throughout that for the management, the comfortable spread stand at about 5.7% to 5.8%. Why is it 6%? This was an RPLR increase of 25 bips that happened in Q1, because of which you see a spread of 6%. But from a long standpoint perspective, I think 5.7% spread is indicative from Aadhar Housing Finance.
Okay. Asset quality, Rishi, has deteriorated marginally. I know it's not been a big concern for you, but gross NPAs now stand at 1.3% versus 1.1% quarter on quarter. Is there any stress, even incrementally, that you're observing? And what is the guidance on gross NPAs for the next 3 quarters as you see it?
Okay, Riba, the way we look at this is from a first I will come to YOY and then I'll come to sequential quarter. YOY perspective, from a 1.46% that was reported in Q1 FY24, we are now at 1.31%. So there is an improvement of about 15 bips on GNPA numbers. Again, when you look at a sequential quarter from Q4 to Q1, again, it is a complete seasonality impact. And if I standalone look at this quarter, I am, as an organization, I am more concerned, or I would rather be more happy with the way the collection team has performed on a YOY basis. Similar quarters, they have given me a 15 bips lower GNPA numbers. So no stress on GNPA numbers even as we go ahead.
Okay, so no stress on asset quality. Clearly, you're not perturbed about growth either, because that guidance is 22 to 24%. But Mr. Anand, I mean, just wait on this whole issue on taxation on housing, right? Though I think you cater to the segment where there's a lot of actual end user demand. But in general, what's your sense that the old has been grandfathered? That's no longer an issue and you have the option to choose your tax regime. But going forward, it's a new sort of taxation era, and the rate is going to be 12.5% for anybody who's buying a house after the budget. Do you see this impacting demand in any way, especially the end of demand, which is not 100% end use? You know, there are people who still take a house, a second or third house, even though they may not need it immediately for self-use.
Surbi, I will try and give you 2 flavors to it. One is up till the budget date, things have been taken care of with the choice given to the consumer. So that has been taken care of. As we move ahead, now I'll give you a generic view on the LMI segment and upward premium segment. Yes, there might be impact on investments, etc. But when it comes to Aadhar Housing Finance, since we cater to the lowest segment of the society, where, in a lifetime, the consumer would make only one house. So for him, looking at investments and sales, so from a perspective of Aadhar Housing Finance, I don't think it would matter at all, even as we move ahead, because we are focused on the low income segment and we continue to do that.
Fair enough, absolutely. And for that segment, I mean, the dream of owning a house remains one of the most important achievements in life. Totally understand that. Thank you very much for joining in with the perspective on the business. That's Aadhar Housing Finance at the end of the first quarter. Take a quick break, back with more on the markets in just a bit. Welcome back. Let's look at some stocks on the move. BSE is buzzing on the back of what looks like a very solid first quarter. The stock was up about 7% last I checked. Vamakshi is here. I make that 8.5%. Wow. Vamakshi has details. Vamakshi, so what's worked so well for BSE this time?
Well, it's a strong set of numbers working well for BSE this time around. Revenue is seeing an uptick of almost 24% sequentially, and a large part of this growth is being driven by the transaction charges, which saw an uptick of almost 45% on a sequential basis. Treasury income was up nearly 7.6%, and other security services was also up nearly 16.4%. So good growth coming in on the revenue on a sequential basis. But it is the EBITDA margin that has actually shot up very sharply from 19.7% to 46.73%, and this is largely being driven by a sharp fall of almost 53% in SEBI's regulatory fees, as well as a 5% decline in admin and other expenses. Now keep in mind that the company was asked to pay regulatory fee to SEBI based on annual turnover calculated on the notional value of options as compared to the premium value, and which is why they had to make a provision of almost 170 crores in FY24, particularly in the fourth quarter, and as a result the margins in the fourth quarter look a bit subdued. But on a sequential basis, it's definitely a huge jump optically. EBITDA also was up almost 2 times sequentially from 96 crores to 284 crores, and net profit too was up nearly 1.5 times to 265 crores. So overall, operationally, it was a very strong quarter for BSE.
Okay, thank you very much for that. It's just that the uncertainty of some sort of F&O regulation does hang on BSE. But look at the way the stock has moved, 190% in the last year, and the 5-year CAGR return for the stock is more than 70%. Well, with that, it's a wrap on Trading Hour from the entire team. Thank you for watching.